Alright. Okay, so today we are going to speak about instrument of deposit. And now we have our director of the company, Nur Hanti Javid. And next to her is our operation manager, Nur Daripada Binti Shahan. And next to me is our finance and accounts, Sirah Dawud Subanan. And I as a business development Nur Aini Aman. So let's start our meeting.
What is negotiable instrument of deposit? A negotiable instrument is a document which the payer specified on it guarantees the payment of a certain sum of money at a certain time or on demand. Or to be more precise, it is a contract or instrument that is part of a contract that guarantees the unconditional payment of funds, which may be given either on demand or at later time. Who is the market player in negotiable instrument of deposit? So the market player consists of financial institution, investor, intermediaries, regulatory bodies, rating agency, clearing houses, and market participants. So in financial institution, there are several main issuers which consist of banks, credit unions, and other financial institutions. So they provide a range of deposit options in an effort to draw client and raise money. And to issue this instrument, this institution possess the requisite infrastructure, knowledge, and regulatory clearance. So the second one is investor. Investor is the primary market participant in this product. So the people who buy these instruments are called investors, which include individuals, company, and other organizations. In order to receive interest on their deposit, they place their money with the financial institution that issue the instruments. The third one is intermediaries. Intermediaries function as brokerage houses or investment advisor, which may be involved in the trading or distribution of Nids. They also act on behalf of their clients, which they assist in the purchase or selling of these instruments. So the fourth is regulatory bodies. Government regulatory bodies oversight of the issue and trading of Nids. And they also guarantee ethical behavior and safeguard investors' interests. They set rules and regulation and keep an eye on compliance. So the fifth is the rating agencies. Rating agencies provide these instrument credit ratings after evaluating the risk and creditworthiness of Nids. This rating also assists investors in making well-informed investment decisions by giving them a sense of risk level of the instrument. The next one is clearinghouses. Clearinghouses act as middlemen between Nid vendors and purchasers. They also make sure that all transactions are carried out correctly and that money is transferred by facilitating the settlement and reconciliation process. The last one is the market participant, which consists of hedge funds, individual traders, and institutional investors. They are all actively trade in negotiable instrument of deposits in the secondary market. What is the reason negotiable instrument of deposit is issuance? The first reason is flexible investment option. Second, steady and predictable income. Third, liquidity. Fourth, lower risk compared to other investment. Fifth, interest rate advantage. And the last one is medium of exchange. The first one, flexible investment option. For both people and companies, negotiable instrument of deposit provide a variety of investing choices. They give investors the option to deposit money and receive interest on it for a predetermined duration of time. The ability to match investment goals and risk tolerance is made possible by the flexibility offered by interest rates and maturity periods. Second one is steady and predictable income. The interest earned by negotiable instrument of deposit offers a steady source of income. Because of this, they are a desirable choice for investors looking for consistent return on their investment. The third one is liquidity. Negotiable instrument of deposit such as short-term options can be issued with varying maturities. Depending on the term of the instruments, this gives investors the freedom to access their money as needed. And because of these liquidity features, Nids are the best option for people and companies who need to access their money quickly. The fourth one, lower risk compared to other investment. With negotiable instrument of deposit, investors can diversify their risk and possibly improve the performance of their entire portfolio when combined with stocks, bonds, and other asset classes in a diversified investment mix. The next one, interest rate advantages. Negotiable instrument of deposit may have greater interest rate than conventional savings or investing option under specific economic circumstances. So investors looking for higher return on their unused capital may be drawn to these instruments. The last one is medium of exchange. Medium of exchange is an intermediary instrument used to facilitate the sale, purchase, or trade of goods between parties. For an instrument to function as a medium of exchange, it must represent a standard or value accepted by all parties. For example, in the modern economies, The medium of exchange is the currency.
So let's move to benefits of investing the instrument. First, principal guarantee. The investor will receive 100% of their principal amount as long as the investment is held to maturity. Second, exposure to various assets and tenors. The investor will get to choose the different types of investment assets that they want to exposure to. Third, lower cost of investment. The upfront fees for investment management will remain unchanged by the company. Diversify investment portfolio, which is widen the range of reference underlying an investor's investment portfolio and have an alternative to direct investment in asset classes of reference. Asset class accessibility. The exposure to asset classes such as foreign equities, commodities, and indices that generally not accessible by retail investor. Fully customizable, which is customized solutions cater to various market scenarios and numerous payment options to maximize your investment yield. Liquidity and credit creation, which is negotiable instruments improve liquidity by offering a way to create credit. They make money available to both individuals and corporations by utilizing the instrument's value. For example, a firm can use a promissory note as a negotiable investment to obtain a loan from a financial institution, boosting the sum of money that is available for working capital or investment. Safety and security, which is negotiable instruments offer a high level of safety and security in financial transactions. They provide legal protections and enforceability, ensuring that all parties to the transaction are obligated by law to carry out their responsibilities. This will help to reduce the risk of payment default and enhances trust between transaction parties. Flexibility and convenience. Negotiable instruments offer flexibility and convenience in financial transactions. They can be customized to the parties' particular requirements, including deciding on the terms of payment, the dates of maturity, and other details. Moreover, negotiable instruments can be easily transferred, which enables parties to adapt and modify their financial arrangements as their circumstances change.
Characteristic of negotiable instrument of deposit needs. There are 8 of character. The first one is writing. Negotiable instruments are typically in writing, signed by the matcher or drawer, containing an unconditional promise or order to pay a specific sum of money. Next is transferability. One of the crucial features is transferability. The holder of the negotiable instrument can transfer the right to another party through endorsement or delivery. The third one, promise or order to pay. A negotiable instrument involves either a promise to pay in the case of promissory notes or an order to pay as in the case of draft or check. Payment in money. The instrument involves the payment of a specific sum of money, not goods or service. The amount must be certain or capable of being determined. Next, payable on demand or at a definite time. The payment must either be due on demand or at a specific future date. The characteristics ensure clarity about the time of payment. Interest and maturity. The negotiable instrument of deposit may specify the interest rate, if any, payable on the deposit, as well as the maturity date or condition for withdrawal. Fixed amount. The amount payable on the negotiable instrument of deposit is typically fixed and certain. It represents the value of the deposit made by the account holder. And the last one is security. These instruments are often considered secure financial instruments as they represent funds deposit with a reputable financial institution.
Okay, so next we have maturity period of negotiable instrument of deposit. We have short-term and long-term period. Short-term must be repaid within 1 month to 12 months, and long-term must be repaid within 12 months to 120 months. Long-term are more vulnerable to fluctuations in interest rates compared to short-term. Lag protection from Perbadanan Insurance Deposit Malaysia (PIDM) typically ensures regular deposits in the event of a bank failure. And the last one is conclusion. Negotiable instruments of deposit and IDS in terms of market player such as banking institution, depository, and issuer, and the investor. We get to know more about NIDS, such as reasons of this issuance that brings convenience, security, and liquidity that easy to convert into cash. This NIDS is a short-term instrument because it is being used in money market. It took between 2 weeks and a year to mature. It is also guarantees their buyers the payment of principal and interest after a maturity date.